Hello, today is the 2nd day of November 2012. Welcome to today's silver chart update. This will be the weekend video. Not much to go on, so there will not be one on the weekend. There still might be a video, and there might not. The more often 3150 is tested, the more likely it is to be taken out today. And right now, it is below this Fibonacci support level of 3152. Now, what I like about this 18 average bands is it, quite frankly, just makes it easy, at least for myself, to determine the message of the market a lot better. As I see as it was going down, you have a declining average, and as I was saying in previous videos, for this to go bullish, this thing needs to flatten out and then get above it. So you're trying to get to the first step, you make it up above here. What's important, or to get this thing to flatten out, is to ensure that a higher low gets put in place, or it at least continues staying within this sideways consolidation period. Well, it broke up to new highs. In fact, there's really two key significant resistance points, one of which is right in here. Obviously, it broke through that, and then just this little piece here. So it got by two significant short-term resistance pieces yesterday before it obviously broke down. Now, in a bearish scenario, when you see the pattern, you're in declining average like this. Next thing you know, you come down to a Fibonacci support line that's supposed to be support, which it was, up to this 18 average band that's declining. And then you start to go lower. If it doesn't find support in here and continues to go lower, then that's a very bearish scenario, which is exactly what the case happens to be. So it does look as if this is going to have continued downside. Also, a good thing to note too is before a large move occurs, generally speaking, you're going to get a fake move on at least one of the directions. Well, there's the possible first fake move, so you still want to gauge to see if this is going to be that of a failure. It really needs to hold and stay above this 31.5 level and really re-enter the range, get back within that 18 average band. But I would be expecting this to have a much higher shot of testing new lows in the next few days as we go into next week. As far as the Fibonacci retracement is concerned for the short term, we're going to be looking at levels from here to here. And of course, going down below here, there's two levels. There's one at 30 and there's one here. 30 is a more long-term Fibonacci level because I take the low of 26.12, but I'm going to take the high from February of this year of 37.5, which gives me 30. So really this entire band would be the area for support if this thing continues to go further. So as far as the Fibonacci retracement from here to the low, let's take a look at this on the 60-minute chart or the hourly time frame. And this is what has just occurred as of 11 a.m. Eastern Time, a move of 1.39% in just that hour alone. Now, as far as these Fibonacci retracement lines, I really expect these to be placed at significant areas. So this line right now is at a very key support level. And this resistance line, or this other Fibonacci line, is also at that key level. The bottom today, or just a few minutes ago as I'm doing this video, is 31.16. This is from XAG/USD. This is not the futures charts, although there's only about a 2 or 3 cent difference anyway on the two. Therefore, in any moves, I'd be looking for Fibonacci resistance to be found at, of course, 31 3/4 and about 32 and a dime. If this continues to break down below 31.16, I'm going to expect this line to move down to 31.52. Because as I'm stating, whenever this thing makes new highs, new lows, and the Fibonacci levels change or adjust within it, it just happens that more times than not, or almost all the times, it seems that these lines are at key levels. 31.52 is most definitely a significant level, so that's why I'd be expecting it to go down there if, of course, it breaks lower. It's already at key levels as we are seeing this right now, of course. So that will be it for today's video, and thank you for tuning in, and have yourself a great weekend. Bye-bye.